Yesterday, I made $600 in less than 2 hours using this simple strategy. Would you rather work a 40-hour week to make $600 or make that amount in a few short hours using a simple strategy? Today, I'm going to show you how I use a simple strategy that I use every day to make an easy $600 in less than 2 hours. When I was first learning how to trade, I was self-educating from a free course that I got from some random person on FamFX. And one of the main things that they always talked about was expectational order flow. Now, when you say order flow, of course, people talk about the depth charts and all that. I don't read those and I don't know how to truly. But when I talk about expectational order flow, I'm talking purely looking at the charts, understanding where market wants to go, where the banks or big players want to move the market, and just simply following a trend. Today, we are going to go over that exactly on the charts. But before we get into that, we need to understand some simple basics of order flow and how we want to look at it. One of the main reasons I follow and utilize expectational order flow is because it allows me to play with the banks. The same way I use liquidity is the same way I use order flow. I match the two up and it works to a perfection. When we talk about big players, these guys need to execute orders at large scales and in positions. So they can't just do it all at once. They have to do it over a period of time. Usually when you see the market sideways chopping, when you see it going in a range, people call it support resistance. People call it a range market consolidation, equilibrium. I call it, hey, buyers and sellers are happy and no one has taken full control. So when you see these things oftentimes on the lower time frames, 1 hour to 5 minutes to 5 second to 1 minute, the banks are moving price up and down. They are following a trend. They are allowing you to see that order flow. And of course, a large move will come, but it allows you to understand how to follow the trend, how to be more conscious and confident in your setups and take them. Another big tip that you need to understand is the market is an algorithm. The market operates off orders. The reason I trade liquidity is because the market's job is liquidity. We as people are liquidity. It's not about stop loss hunting. It's not about any of that. The market needs to gather money. It needs to get sellers. It needs to get buyers in order to move the market, follow its time on the algorithm and move along. Banks pay attention to these things. Of course, in my last video, or in my last couple videos, I've always said we don't study the charts, we study people. So understanding that the market is an algorithm, it needs orders. When you say follow order flow or expectational order flow on the chart, all we're doing is seeing fair value gaps, seeing imbalances, seeing liquidity levels. When price gets back to those levels that made a sharp move or broke out of a range or anything of that sort, we understand that when price goes back to that level, it's just gathering orders. Now, it can manipulate and take that level or it can respect that level. We don't know which one, but we follow the trend, we follow the order flow, and we execute. The last reason I want to share this with you guys because I'm here to help you become a professional trader with professional profits. And most importantly, my job is to make sure this is very simple for you, that you are well equipped, and that you become very confident. And if anything will make you confident, this strategy will, because 9 out of 10 times it happens on a daily basis. It's something that you can go back test, collect data, and mark up your charts consistently so you can get the feeling for what it does, how it works. So without further ado, let's get into the charts. We have a goal to hit 100,000 subscribers by the end of the year. If you haven't already, hit the subscribe button, show some love to professional profits so you can become a professional trader. Before we get started, some main things you need to understand is understanding how to see volume, understand the candlesticks and the different types of pressure that enter the market, as I'm going to show you here in the charts. And just stay patient because this won't be a long video. This won't be a long video, but I promise you by the end of the video, you'll have a simple strategy that can make you hundreds of, if not millions of dollars. How do I know that? Because it's proven, and that's what I'm going to do with it. So let's go. So as you can see here on my chart, guys, we have two sets of price action. Very simple. This is going to be a very quick video, so stay tuned, lock in, hit the subscribe button, leave a comment below. Hey, real quick, leave me a comment below. Let me know what y'all want to see next. I need some help. Feel me? I need some help from y'all. I need y'all to let me know what y'all want to see because I'm bringing content all year. And the reason I'm doing this is because my job is to help you get what you want. Your job is just to show some love, but my job is to make sure you're making some money in these markets, becoming a professional trader, and that's what I'm going to do for you. So let's go. So as you can see, our two sets of price action, we have our bearish and we have our bullish. If you're looking a little confused, all it is lower lows, lower highs, and higher highs, higher lows, right? But when we actually break it down, this box I have. So imagine if we zoom in here on this, we have this box and we have this low and this high. When you're following this order flow, it's very simple. You take the box, whatever you want. You could take a line, you could take a fib, it doesn't matter. You'll take it from the low to the high, from the high to the low. All you want to see is price actually break out of that level. And when I say breakout, I'm not a breakout trader. I don't trade breakouts one bit. I pay attention, but usually price is just breaking out of a range that it was in, meaning it had a high and a low. It came, respected that high, supply zone, took the low out. That was the range. Now it's in a new range, which will be from this low, from this high to this low. Now, once it break out of there, you'll see something like this. We'll come back into that. Now, when price come back into that level, doesn't matter if it comes this deep, doesn't matter if it comes here. Once price comes back into that level, we are interested in taking that trade. Now, sometimes on a lower time frame, you'll see the 1 minute or something like that where price will, you trade something like this, you get a nice re-entry, but then price start doing this, right? You still can catch entries on those. You just got to understand how to use the order flow. Understand that there's so many sellers in the market. Price don't need to come all the way back into this level. All it needs is this to come back here, right? So, so what we want to see is price break out of that level, come back. We take a small entry, right? Wherever you decide to take that entry is solely dependent on you. But the reason we do that is because we understand that price should be respecting this area of interest. It should be respecting this order flow. If for some reason it doesn't, then we'll move along. Same thing here. Again, the next level. Remember, see it high, your low. You drag that over. You just want to see price break out of this because, again, we need to take this low out because it did respect this high. This should be a weak one, so we add in some liquidity concepts. Little bit too complex for you guys right now. But let me know in the comments if you want to break that down, align it with liquidity, weak highs and weak lows, because that will benefit you a ton with targets, entries, and exits. So we take out this range here, and then again, now we come to the bottom of this range, we respect it. Sometimes price won't come, and you may have a larger stop loss. So for you, somebody, if you say, hey, I'm going to have a 100-point pip or 100-point stop, you could do something like this. Or if you say, hey, I understand price, I don't think price is going to come deep into this range when it matching the orders, I will take out 50% of the level, put my stops there, which would be somewhere around. Simple. Once price get a little overextended, two things can happen. We could completely, we'll draw this out again from our high to our low. We can completely go like this and then completely just wipe out that area, or we could just continue to respect it like we have been and then make a new low. It's the same thing on the buy side. You got a high, you got a low. You break out of that range. As you can see here, we cross over out of that range right here. We come back into that range. Before we even open that, boom. Then we do the same thing. We break out of that level and we go from here. Now, the reason this helps is because sometimes price gets very complex. It don't just look like this. We all know price don't just make higher highs and higher lows, as I'm going to show you real examples in a few minutes. And again, guys, this is going to be really quick. I know I'm moving a little slow, but I want you to understand it because it seems super simple, but it's not. When we get to areas like this, sometimes price may break out of that level of order flow or that level right here, So now we got, okay, hey, we need to create a new low and we need to create a new high before we understand what our new range is. Anytime before that, we are still rested between this low and this high. Simple, right? Price can go here, tap into the range, and then you take an entry and then it doesn't make a new high. It actually makes a lower high, and then takes that level, comes deeper into that. And then even so, it don't necessarily have to take that high either. It could come down here even more deeper and then eventually go up here and take that out. So the beauty of this is to understand, like, hey, if we can map this out, if we see price moving in these directions, if we see price trending a certain way, strong too, and this not showing the volatility, but that's what we trade in. We're not trading something that's like pick pack. I'm going to show you an example of that, but this is very volatile. So let's get straight to the real chart so I can show you this, get you guys out of here and get you to making some money. So a really simple example is right here on my screen. To pop that really quick, I just went and found a random one. So if we look at this, right, boom, we were bullish, so to speak. And let's map it out. We had our low, we had our high, or we had our high, we had our low. Price did what? Price came, broke out of that level, came back in here and played around. Price played around, did what? Made a new high, right? We wanted to figure out, hey, why did price go bearish? Well, from this low here to this high, that was our new range. So we could say, hey, this is our new range. Now we drag that over. Price never was able to break out of that range. Evidently, it actually broke lower, and then it didn't break this low, but it did break lower out of that range. So what we want to say is, hey, now I'm starting to see a trend maybe shift. I'm paying attention now, because we didn't actually come here, respect this range still, and then make a new high. We actually took the low that made the high, came back, respected the high, and then do what? We took the low again. So here, from this high to this low here, we what? Broke out of it. Boom, we break, and it took a while, right? But we break out of it. Now, say for example, you were bearish but wanted to actually get into this trade a lot sooner. Or you could lower scale it. You could I let lows get taken. That's what tells me something is bearish or bullish, right? It's not all supply and demand and all this. No. So we have this low and this high, right? Price did what? Broke out of it. We come back, potential entry. Simple. Very, very simple. Boom. I'll hold that there. Again, the same. Well, actually, I'll move that now. So that was one. Then you have this high and this low. You drag it over. You wait for price to move out of it. It did slightly get out of the box. We could just consider this a low right here. And then as you can see, if we go straight into the details, price breaks out of the box, comes right back to this level, which is a nice level. And then you can say, hey, I would like to take an entry there. Now you can put your stops here, or you can put them here above this high. Me, I would probably put them right at this imbalance and then target something down here. So you have two entries. Again, now this is your high right here. This is your new high. When you're selling, things are going to be respected, right? So you're going to have a high respected. When you're buying, lows will be respected. So when we're looking at this, we just want to take that last high that made that new low. Or you could just say, hey, I'm going to create a new range, right? Because price never actually got back to this range right here, which will probably be this high right here, and it just missed it. So again, we just factor in a new one. We take a high to a low, which will be right here. We drag that over. Boom, we break out, we come back into that range right here. As you can see, we take an entry. Or you can say you broke out here, come back, take an entry. It happens over and over and over. Okay, guys, so we got a few examples. It did take me a while, to be honest, to find one. I'm on gold right now, looking for one. And again, it's very simple. We're on the 5 minute now, just to show you how I actually do it throughout the day. And I'll actually show you a trade really, really quick after this. So I'm gonna make this quick that I took last week after New Year's. That was this exact strategy. So for gold, right, we have this low which swept liquidity, made a new high in the market. Typically, you could call this a big range or something like that, right? But what happens is price. So you have gold, we swept liquidity right here, and then essentially what we did is we had this low to this high. So once we took this low to this high, price what? Broke out of it here. We come back, you can take an entry if you want. We break out of it again, then price starts to show some bearishness. So now you got bearish order flow actually shown in the market. And all you're doing is just waiting for price to come back to this level. So now people can say, hey, this is a demand zone. This is a fair value gap. This is a liquidity level, etc., etc. You got so many different reasons to actually take the trade. Then you actually could throw on this, have a stop loss, etc., and then go from there. Boom. Another idea is, again, like you have this high to this low. We break out of that level with some displacement. We come back here, consolidate. You might not even like the consolidation, so you might say, hey, boom, you make a new high from this high to this low. So from here to here, we break out of that. We come back into that range, entry right here. That would be nice if it aligns with time. Yep, around 9 something, and then we continue that trend. Again, the same exact things happening all over. If you say from this high to this low, price essentially did what? Broke out of it, came back, played around in it. We understand that we can be patient. We break out of that level again. We come back to this level. We align it with this 5 minute level here. And then we get a nice wick here. You could take that. Me, personally, I wouldn't take this trade, but it's a beautiful trade, a beautiful opportunity. And then it just so on and so forth. You have a ton of examples of just, hey, follow the order flow, follow the order flow. I would potentially say, hey, this level swept liquidity. Let me see this level show some strength. We broke out of that level. We come back to it. I'm taking an entry every day right here at the top of this for a nice whatever, target whatever. And the same thing happens here where you get this high to this low. We break out of that. All we want to do is wait for price to come back, and then you get another entry very smoothly. And you don't gotta worry. You might have bigger stop losses, and that's fine. Get in the market, make you some money, get out the market. We respected the level over here. I mentioned this in my last video. We respected the level over here, and then what we did was make a new high. But this new high became a liquidity. Why? If I just drag out my order flow, what did we do? We took some liquidity right here, sweep. We broke out of that level, we came back into that level, we broke out of that area. So now what I want to see is this, because this was the respect. This could have been a nice trade, but that would have been a huge stop loss, right? But if we take from this high to this low now that we broke out of, we come up here, we break out of that level, we come back into that level. I played a premium of that level entry. I did take this, and then you target the external low, which was down here to the left. Make some nice money, but that is order flow. So with that being said, the number one thing you don't want to do is over analysis of these things. Understand that order flow is just another tool. It's not something that you use every day, or not something that you use by itself. You want to pair with things like liquidity, supply and demand, liquidity, ICT, OTE, things like this, previous day highs and lows, things like that. Pair it with other things that allow you to actually progress in the market and use it to make you some money. I hope that helped, and remember to always stay disciplined. No matter what you do, find a plan, stay disciplined. What I would recommend with this specific strategy is go collect data, go see it, go map it out, go look for it all over the place, and then execute on it, because you want to make sure that something works for you, your personality, your style of trading. You may be a swing trader, day trader, position trader, or scalper. You want to make sure it works for you. I hope it does. And again, thank you for allowing me to help you become a professional trader with professional profits.